All right, today we are diving deep into a fundamental problem in the world of crypto, that constant battle between privacy and freedom. We're going to break down a new kind of protocol that claims you don't have to choose between the two anymore. So let's get right into it.
You know this dilemma if you're in DeFi. It's the big question, right? Do you trade on these super transparent platforms where, your every single move is out there for the world to see? Or do you go chasing privacy only to find yourself kind of stuck, cut off from all the big markets and all the liquidity? It always feels like a compromise. But what if it didn't have to be?
Okay, so to really get why a new solution is so important, we have to look at the absolute minefield that is cross-chain trading right now. Trying to move your assets between big ecosystems like Ethereum and Solana. I mean, the current landscape it's a mess. So many platforms make you give up your real-world identity with all that know your customer stuff, the KYC rules, which kind of defeats the whole purpose of decentralization, doesn't it? And if you try to go peer-to-peer, you're literally trusting a complete stranger with your money. On top of all that, liquidity is scattered all over the place. The fees can be just painful. And you're always caught in this tug of war between wanting your privacy and having to deal with compliance. So you're basically forced to pick your poison. You can use a public blockchain, sure, but your entire financial history becomes an open book for anyone to read. Or you could use privacy coins, but let's be honest, they often have pretty limited uses and they tend to get a lot of heat from regulators. The third option, a centralized exchange. But then you're just handing over control of your assets and opening yourself up to surveillance. None of these are a perfect solution, not even close. So, how do you solve this puzzle? Well, this is where the protocol we're looking at today introduces something really fascinating, a hybrid approach. Instead of making you pick one extreme or the other, it actually tries to give you the best of both worlds. So what exactly is this hybrid privacy model? Well, think of it like a really clever compromise. It uses some seriously advanced cryptography that lets you prove you're a legitimate trader without ever revealing your name or any of your personal details. So your identity stays a complete secret, but the trade itself, the amounts, the assets, that's all public enough to keep the regulators happy. This slide just lays it out perfectly, the old way versus the new way. The old way is basically a chain of risk. You expose your identity, you have to trust some random person, and you just hope your assets are safe. But this new way completely flips the script. Your identity, it stays private. The verification part, that's handled trustlessly by something called multi-party computation. Just think of it like a group of computers all voting to confirm your proof is valid. But no single one of them ever gets to see the proof itself. And finally, your assets are locked up safely in a smart contract until the trade is 100% complete. So, how does this system actually walk that fine line between secrecy and transparency? Let's break down exactly what it decides to hide and what it puts out in the open for everyone to see. This table right here, this shows the core genius of the compromise. The single most sensitive piece of information, your personal identity, is kept completely, totally confidential, locked down. But to make sure there's trust and to stay on the right side of regulation, everything else, the amounts being traded, the metadata, the final transfer of assets, all of that is public on the blockchain. So anyone can verify what happened, but absolutely no one knows who did it. The real magic behind keeping your identity a secret is this simple three-step process. First, you submit a cryptographic proof of your identity, not the actual identity itself. It's kind of like showing a bouncer a special token that proves you're over 21, without ever having to show them your actual driver's license. Then, a decentralized network uses that multi-party computation to all agree that your token is legit. Again, without any single computer seeing your info. And boom, third step, you're approved. You can now trade completely anonymously. It's simple, it's secure, and it's private. Now, this isn't just some small technical upgrade. No way. A system like this could have a massive, massive impact, not just for individual traders like you and me, but for the entire DeFi ecosystem. Okay, so for an individual user, the benefits are huge and they're immediate. You get to trade without that constant fear of being doxxed or having your history analyzed. That counterparty risk, the fear of the other person running off with your money, gone, thanks to the smart contract escrow. And because it's built on a super high-performance chain like Solana, you get the speed and the low fees you need for trading efficiently across different blockchains. But now let's zoom out a bit, because the ripple effect for the whole ecosystem could be profound. This level of privacy could finally be the thing that convinces mainstream and institutional money, the big players who've been sitting on the sidelines, to finally jump in. It could help break down the walls between all these separate liquidity pools and create a much more unified market. In short, it creates a platform that can speak both languages. It's private enough for the crypto natives, but it's also transparent enough for Wall Street. And what really makes this such a big deal is its place in the market. According to our source, this is the very first protocol to actually build a working hybrid privacy model for peer-to-peer trading. It strikes that incredibly difficult balance between privacy and compliance that so many others have tried to figure out.
But this hybrid model, it's really just the beginning. The long-term vision for this project is way more ambitious. They're aiming for a future where almost every single part of a trade can be made completely confidential. Just take a look at their roadmap. You can see a really clear path to ramping up privacy over time. By early 2026, the big goal is to hide even the trade amounts using new confidential token standards. From there, it's all about expanding to more chains and rolling out features for big enterprise clients. It's a very deliberate, step-by-step approach toward a future of fully private DeFi. Which leaves us with one final fascinating question. For years, DeFi has been stuck between these two worlds, the ideal of absolute, total privacy on one side, and the practical demands of transparency and regulation on the other. By protecting the person but revealing the transaction, could this hybrid model finally be that elegant, practical compromise the industry has been searching for this whole time? I guess only time will tell.